What's going on? What's going on? What's going on? Shout out to everybody in YouTube, Facebook, IG. Quick video. I wanted to talk to y'all about one of the easiest home loans to qualify for in today's market. For those who don't know, just by the title, that is going to be an FHA loan. Later on in the week, shout out to all my veterans. I'm going to come on here and talk about some VA loan options because that is another great program if you're a veteran, if you can qualify for it. But when you're looking at buying a home, if you're not paying cash, you're going to need a home loan. One of the easiest loans to qualify for, and this program doesn't get enough credit, is the FHA loan. And then, there's four major loan types. There's a conventional, USDA, VA, and the FHA. Those are the four major loan types. And then the reason why FHA is one of the best loans or one of the easiest to qualify for is because when it comes to their guidelines and their requirements, the income is another thing as well, a lower down payment, but then the credit scores. So let's start there. So when you're looking at getting an FHA loan, I keep looking back at both screens, my fault, y'all. When it comes to, I might start this over. No, we're gonna keep going. This is live. I'm telling you, I'm gonna do so much content that this isn't even going to show up on my page. So I'm gonna just keep going. But when it comes to getting an FHA loan, credit requirements goes all the way down to 500. So for most loan programs, as I mentioned, with the conventional loans, you're going to need a minimum of a 620 credit score. When it comes to like FHA loan, from all the way down to 500, if your score is less than a 580, you're going to need at least 10% down. With the 580 or up to 580 or 580, I should say, and above, you're allowed to put 3.5% down. So some of the pros of an FHA loan: lower interest rates. Like right now, and this is based on like Mortgage News Daily. I can check them out. When we look at the 30-year, where the 30-year fix is at, let me keep messing up my videos. When we look at where the 30-year fix is at, they're at a 7.48. For like VA government loans, FHA, looking at a 6.84. Right. So before, one of the things that was an issue or a hindrance to a lot of home buyers was the mortgage insurance. So a lot of people would not complain, but it is something that you have to keep in mind, right? With the FHA loan, there's mortgage insurance on it throughout the life of the loan, depending on how much you're putting down. So unless you're putting down 10%, you're going to have mortgage insurance on it throughout the life of the loan, which isn't the case if you're doing like a conventional loan. The mortgage insurance drops off at a certain point. With FHA, that stays on throughout the life of the loan, but the mortgage insurance has dropped and has decreased. So that's a good thing. Lower down payment, as I mentioned, with the FHA loan, 3.5% down. That's on a 1 through 4 unit property. So it's a great option. I just realized for those on YouTube, you can't see my hands down here. I have my dog is in my lap. So pause over that. But and then flexible rehab options. So in addition to being able to put down a low amount, the 3.5%, when it comes to like FHA, they have rehab loan options as well. So a 203K where you can finance in the renovation cost of the home. So it doesn't have to be the perfect home that's sitting on the market. You could turn it into the perfect home, right? So some of the cons, as I mentioned, costly mortgage insurance that has decreased, so it's not as costly as it was previously. Loan limits, lower loan limits. So with a conventional loan, you can there's a higher loan limit. FHA only goes up to a certain amount based on the county you're in, based on the part of the country you're in. So that's another thing to keep in mind, lower loan limits. Stricter appraisal requirements. So FHA loans, and this is something that you'll see as well if you're currently in the market, stricter appraisal requirements. A lot of times, like realtors will steer their clients away from FHA loans, or sellers might not want to accept an FHA loan if they have to do certain certain repairs, or they're afraid they're going to fail an inspection, which to me is a good thing for you as a home buyer, because like you want a property that is move-in ready, right? Like or not necessarily move-in ready, but depending on the loan type, as I mentioned, the fixer upper and the 203K and all of that. But you want something that is somebody looking out for you, somebody's going to look out for your interests. So to me, that's not necessarily a bad thing. And then another con of FHA loans, sometimes they're not favored by sellers. So to me, this is more of a lack of education on the consumer's part. So on sellers' part, they're not really familiar. They think the loan is going to fall through. The buyer might not close. The realtor might not have a lot of information on it. The realtor might think they have to do more work or this and that, so they might steer their seller away from these type of programs. But FHA is a great program, and honestly, unless you're buying cash, like anything can happen. With there was actually a story, I believe it was on Redfin, where a lot of sellers were walking away. A lot of buyers were pulling out of contracts, and this was conventional loans. This is all type of loan programs, right? So if you're looking to buy a home, FHA loan can be right for you. When it comes to like why this is a good option right now, if you're looking to use an FHA loan, there's a big shift in the market. So real estate, we're heading into the winter seasons, the winter month. Right now, today is November 6th. We're heading into, as we get towards or closer to the holidays, you have a lot more people pulling their homes off of the market, right? A lot less people trying to move, a lot less competition. So those people who might have been hesitant to accept that offer, like, are going to be way more accepting now, because they want to get that home sold. So that's something to keep in mind as well. And then, like, as home prices are continuing to rise throughout the US, but as home prices rise, so do the loan limits. So that's something else to keep in mind. So as 2024 approaches, like, you'll hear more about the new loan limits for conventional loans. Like some banks that we work with are already like accepting loans at the newer loan limits. So it's a great option, as I mentioned. Two down payment assistance programs I just wanted to tell y'all about real quick. They are like FHA loans. So one is a grant, a forgivable grant, where they give you either 2% or 3.5% down. So you're not coming out of out of pocket with any money. So I'm going to get into this too a little later on, because there still are closing costs, there still are expenses, but that down payment is covered, right? So for your fully forgivable grant at closing, you walk away 3.5% down. They give you that money up front. It's forgivable at closing, no repayment. Minimum 640 FICO. First responders, educators, teachers, military, first-time home buyers. Those are the general qualifications for that program. Generally, with down payment assistance programs, you're going to have a slightly higher rate, just because there was more risk on the lender's part. Like, you're not coming in with any money, you're not coming in with like anything up front, so you're going to have a higher rate. There's going to be a higher monthly payment in that aspect, or in that respect. And then another one is the Boost down payment assistance program. So with this program, this is a repayable second, 3.5 or 5%, goes to, say, 3.5 to the down payment, 1.5 to the closing cost. Generally, your closing costs are going to be more than that 1.5%. But like, that's a repayable second. Minimum, that FICO all the way down to a 580 credit score. So again, there are options. Like, if you are looking to buy, do not let the lack of a down payment stop you. There are options. Have conversations. Speak to like your local lenders. Speak to your realtors. Every realtor should have a lender that they work with, who can advise them of different programs that could help their customers, their sellers, get into homes, right? Because at the end of the day, that's what we're out here for, is to assist. So documents you'll need, like 2 months bank statements. This is to show like the down payment, closing costs. Down payment, closing costs. There's just some basic things they're going to look at. Income, 2 years income, All right. So when it comes to closing costs, because I mentioned like not having to come out of the pocket, not having to come out of your pocket initially. So one expense that you will have to come out of your pocket for is the appraisal. So the appraisal, closing costs, and like other closing costs, you're gonna have these closing costs regardless of the loan. The only difference between like say an FHA loan and like a conventional or something like that is going to be the upfront mortgage insurance that's going to be factored into the added to the closing costs. But other than that, appraisal, title insurance, taxes, property tax, escrow fees, like those are going to be across the board, no matter the loan type that you're getting. So something else I wanted to touch on. Oh, all right. So seller's concessions, right? So depending on the market you're in, asking for more money back or asking for money back is going to make your offer less attractive. So if you're in a seller's market, and then like as I mentioned, FHA loans might not like be as attractive to sellers, right? Asking for a concession is going to further make your offer less attractive. But the great thing is the market is shifting. We're inventory, some as I mentioned, seasonality heading into the holidays. You have properties that have been sitting on the market, less offers than what they were getting like a year ago, a year and a half ago, even like earlier this year, right? So a great option is to, because with FHA loans, you can get 6%, up to 6% of the purchase price back as a seller concession. Like if the property value is there, you can try to finance your closing costs into the offer price, right? So if you're purchasing a property for like 290,000, offer 300, get $10,000 back in closing costs or in a seller's concession, and that'll like more than pay for it. So you're really truly not coming out of pocket for anything other than the appraisal, because that's paid outside of closing. But definitely, if you have any questions about that, like that's a great option for anybody who's looking to get a purchase a home in this market. So how to make your FHA loan, how to get your offer accepted, right? So the main thing or the main tip that I have for anybody, and this isn't only for FHA loans, this is like for all home loans and across the board, go through the pre-approval process up front. Get your documents up front, have it fully underwritten up front. No guessing games, like unless you have perfect credit, unless you have perfect credit, like full 2 year salary, everything, like no issues. I still wouldn't even, I would still suggest like going through the pre-approval process upfront, just because once you submit your offer, you can just hit the ground running. Like there's we close 10 days, 13 days, 17 days. So like if you've already gone through this process up front, by the time your offer is accepted, like clear to close, right? And that's what you want. That'll definitely like help your offer stand out in a tough market. All right. So any questions, definitely hit me up if you're looking to buy a home early next year, and you have questions about like not only FHA loans, but as I mentioned, I'm gonna hop on here and chop it up with y'all about VA loans and options for my veterans, as well as we're gonna talk about some conventional loans and different things of that nature. But like definitely any questions regarding the process, regarding the home buying process, that's all I do, man. Eat, sleep, sell, repeat, or eat, sleep, finance, repeat. I couldn't find a finance one, but definitely chop it up. Kenneth at mortgagedepot.com. Let's talk.